Charlie Javice, once seen as a rising star in the tech startup world, has been sentenced to more than 7 years in federal prison after being found guilty of defrauding JPMorgan Chase in a $175 million acquisition deal. The 33-year-old founder of the student financial aid platform, Frank Gerst, broke down in tears as she addressed the court, expressing deep regret for her actions. Javice admitted she had betrayed the trust of her investors, employees, shareholders, and JPMorgan itself. Turning to her family in the front row, she apologized for the pain she had caused and thanked them for standing by her throughout the ordeal. "I will spend my entire life regretting these errors," Javice said, asking the judge for forgiveness and mercy. But U.S. District Judge Alvin Hellerstein made it clear that while he believed Javice could turn her life around, accountability was necessary. "I sentence people not because they're bad, but because they do bad things," he told her before handing down the 85-month prison term. Alongside prison time, Javice was ordered to forfeit $22.36 million, pay $287 million in restitution to JPMorgan, and serve 3 years of supervised release once her sentence ends. She remains free on bail while appealing the decision. The case stems from JPMorgan's 2021 purchase of Frank, a startup that claimed to have more than 5 million student users. The platform was designed to simplify the financial aid process for students, and JPMorgan saw it as a way to connect with younger customers. However, the truth came out months after the acquisition. Frank had fewer than 300,000 real users. The rest were fake, synthetic identities created under Javice's direction to inflate the company's value. According to court testimony, when an employee balked at fabricating data, Javice brushed off the concerns with a chilling remark: "Don't worry, I don't want to end up in an orange jumpsuit." Ironically, that's exactly where she has ended up. Prosecutors argued that the scheme was driven purely by greed, calling the acquisition a crime scene rather than a business deal. Assistant U.S. Attorney Micah Ferguson emphasized the embarrassment the fraud brought to JPMorgan, one of the world's most sophisticated banks, which had rushed to beat out competitors for the acquisition without fully verifying Frank's customer base. Javice's defense team pushed for leniency, pointing out that unlike the infamous Theranos scandal, this case did not put lives at risk. They argued that Frank still provided a service to students and that Javice's punishment should not be comparable to Elizabeth Holmes, who received an 11-year sentence for her role in Theranos' medical fraud. Despite those arguments, the court sided with prosecutors in emphasizing the severity of the financial deception. The fallout serves as a stark reminder of the risks in high-stakes startup acquisition and of how quickly ambition, when mixed with dishonesty, can unravel a promising career.
For full video, click related link below or like and subscribe this channel.